Welcome back to Your Average Investor, the channel that looks at my journey through investment, budgeting and finance. Now, I realise it's been a few months since I last uploaded, and that's because a lot's been going on recently. Over the last few months when I started the channel, we were obviously all working from home, and then the summer break came into effect. And obviously for those of you who's watched my videos before, you'll know that I'm a lecturer, so I have a nice long summer break, and throughout the COVID period I was working from home, so I had a little bit of spare time on my hands to be able to do it. Now I've gone back to work after summer break and there's lots going on with COVID at work. It's a little bit more difficult to find time to put videos together. So what I'm going to try and do is upload at least one video per week from now on, after having, like I said, 1 or 2 months off away from YouTube. A lot's happened over the last 2 months and I've finally hit 1,000 subscribers. So thank you to all of you who subscribed and continually supported the channel by watching videos, commenting on them and liking it. I'm now sitting at around 1,300 subscribers, which is something I never imagined when I first started out this YouTube channel. So thank you to each and every one of you who have subscribed. Now, because it's been such a long time since I last uploaded, we haven't had the opportunity to look at either my Trading 212 account or my Vanguard account recently. So today, I thought we'd take the opportunity to have a look back at my Trading 212 account and see how it's progressed and developed over the last 2 months. Lots has happened and fear of more lockdowns has definitely impacted my portfolio over the last month or so, with it being quite negative at the moment. So what we'll do is we'll hop into Trading 212, see where my account's at and have a look at any notable differences from the last video. I'll catch you there. Here we are then back inside my Trading 212 account. You'll notice that the overall value of my portfolio is now £1,249.72. From a total amount invested of £1,399.27. It's been a difficult month for the stock market, with coronavirus worries still rumbling around, along with Brexit and several other things. So you can see my overall rate of return is currently negative 10%, equating to a negative £149.55 return throughout the time I've opened this account. This obviously differs largely from my previous video, where the overall value of my portfolio was £931, seeing a rate of return of just over 2%, returning to me £22. This poor run of form is predominantly down to the increases in coronavirus cases across Europe, especially within the United Kingdom, with a national lockdown looking increasingly likely within the United Kingdom. Across the pond, obviously coronavirus is still a big issue, and also there's a presidential election, which is playing a bit of a role in the American stocks at the moment. You can see that throughout August, my portfolio value was steadily increasing, with it being in a positive rate of return throughout most of August and then early September. And you can see from September the 2nd, it's been downhill all the way, with it slowly decreasing before rebounding somewhat towards late September and early October, and then since kind of mid-October, it has slowly decreased in value over time. So let's take an opportunity to look at my individual investments and see how they're performing of late. You can see that I'm invested in Alphabet Group currently, not much, around £18, but that's currently seeing me a rate of return of just over 1.5%, equating to 28p. Amazon has also had a particularly good year. With the coronavirus occurring and shops nationally shutting, Amazon has been utilised much more regularly than it would have been otherwise in previous years. While it's still an expanding company, coronavirus has definitely helped the growth of Amazon over the last year, with it seeing a great rate of growth for me of around 14%. If we take a look at Amazon in a bit more detail, you'll be able to see that the numbers echo what I've just said, with Amazon seeing a 71% rate of return over the last year. With it starting the year around $1,800 per share, it now sits at over $3,000 per share, seeing a massive increase of over $1,200. If we go back to my portfolio then, you'll be able to see that I'm currently down around £14 or 10% on Apple, and this is since the share split. So what Trading 212 did on the share split is it essentially sold out of all of the positions which weren't over full shares. So any fractional shares that you had would have been sold. So both my Apple and Tesla shares were sold and I reaped the profits that I was in at that point in time. I obviously decided to buy immediately back into both Apple and Tesla. However, since then they have declined somewhat in value. Apple are a company that I see being around for a long time, with their mobile phones and tablets top of the market with regards to market share. From Apple downwards in my portfolio, I think almost everything is in the red, with AstraZeneca down around 10%, AT&T down around 13%, the same as Boeing, which is also down around 13%. BP and oil companies are having a particularly poor year, with my BP investments down around 36% or £19 in total. With Coca-Cola, I'm up around 1.5%, However, EasyJet, I'm currently down around 15% on my investment, and with discussions about a potential local and national lockdown coming within England over the weekend potentially, this could really heavily impact EasyJet and the travel and leisure industry. So I am fearful that this could fall somewhat more over the next few days and weeks. With Facebook, I'm up around 4%, and also one of the new investments I'm in, the iShares Global Clean Energy ETF, I'm up just under 4% on my investment. This is an investment that I've bought into because I see global energy booming in the next 10 years. Not necessarily immediately, however I think over the longer term, people will start to realise that clean energy is the way forward and people need to start moving away from oil and gas companies. Albeit Shell are actually invested quite heavily in global clean energy. Johnson & Johnson, I'm down around 8%, with Lloyds Bank still down around 2.5%, and Microsoft now, after having a particularly strong summer, being down for me just over 3%. We then get to the white elephant in the room, which is Nikola Corporations. Now, this was a company that I was really optimistic about when it went on an IPO earlier in the year. However, since then it has come out that lots of Nikola's marketing was actually falsified, meaning that the company didn't actually have the products at the same level which way they were advertising they had. There's lots of news coming out that in Nikola's promotional videos, the trucks were actually rolling down a hill rather than running under their own power system, something which was not stated within the video itself. Therefore, Nikola has done a massive sell-off, with it down around 55% at the moment, or £26 loss. Realty Income is another fairly new company to my portfolio, and the reason I've invested in Realty Income is because of the monthly dividend or monthly return that it gets back from its investment properties. So I'm down around 5% at the moment, however I do see a steady dividend each month of around 20 pence per share. Royal Dutch Shell, I'm down around 22% or £27, and obviously this is again due to coronavirus and a number of other things going on at the moment. Now, this is one of those companies that just keeps dipping lower and lower at the moment, and I did continually buy throughout the dip. People thought that when it got down to £12 per share, it wouldn't go any lower. The same when it got to £10 per share, and now it's sat at around £9 per share, so £9.29 per share. So it has steadily declined throughout the year, with no real bounce back at the moment. Again, Shell are a massive oil corporation with significant investments into global clean energy. So this is something that I cannot see continuing into the next 10 years. However, it could be a rocky next 5 to 6 years for Shell and Shell investors. We've then got Starbucks and Tattooed Chef, which are up around 3% for me, which equates to around £1 in total. And then we've got Tesla again, which is obviously down around 11% for me at the moment. However, on total, I am actually up around £110 for Tesla because of the investments that have been previously sold before the stock split. So that dip at the moment is something which I can't see continuing for a long term. However, I'm more than happy with how Tesla have performed for me throughout the year, with it being a massive growth stock over the last year. So I'm not too worried about that at the moment. The final share in my portfolio is Walt Disney, which is fairly even at the moment, down just around 6 pence, so nothing there too much to worry about. If you have a look at the overall allocation, you can see that Tesla are still my current largest holdings, with there being around 20% of my portfolio, with Apple, Boeing, Royal Dutch Shell making up the other top 4. You'll be able to see that I hold 21 investments in my portfolio overall, ranging from around 19% weighting down to just under 1% with Lloyds Bank. My allocations at the moment is something that I am looking at altering and changing. So I'm looking at kind of rebalancing my portfolio, which I might do a video on in a few weeks' time. But this is obviously something that I will do lots of research into before I make any final decisions on what to do or how to rebalance my portfolio. If we have a look at the history, you'll be able to see from my sold investments, I'm up around £62. However, that is somewhat incorrect. If we have a look at my actual transactions and scroll down to August the 29th, which is where both Apple and Tesla split, you'll be able to see that it looks like I've deposited £41.91 and £24.16. That is actually profit from my investment from both Tesla and Apple respectively. By adding this amount onto my overall total return, you'll be able to see that I've actually netted over £128 in overall return. If we compare that to what my portfolio is currently down at the moment, you'll be able to see throughout the life of my portfolio, I am actually down around £30. However, with coronavirus, I'm not too displeased with that at all. I'm actually very optimistic about how that's performed throughout this period of time. If you scroll across and we look at my dividends, you'll be able to see that I have now received around £4 in dividends, which is something which has increased quite largely from the previous video. This is something that I can continue to see developing over time, with companies now reintroducing dividends, companies like Shell, who did actually cancel their dividend for a brief period of time. So this is something that I'm quite optimistic about, and it's good to see dividend income increasing and coming in regularly into my portfolio. This is one of the reasons I've chosen some of the companies that I have, because of their strong dividend payout and the way that I see this impacting my portfolio over the long term. So there we have it, a quick roundup of my portfolio at the moment. It's not looking too pretty with it fairly down at the moment, but I'm sure a lot of people's portfolios look similar or the same with coronavirus cases increasing and the increasing likelihood of a local and national lockdown within the United Kingdom or England specifically. At this point though, I have met one of my yearly investing goals, and that was to have over £1,000 invested within Trading 212. And as you can see at the top, my overall portfolio value, including free cash, is now £1,250.77. So there we have it, my Trading 212 account. As you can see, lots of volatility has affected it over the last few months, which is predominantly due to COVID-19 and arguably a little bit of Brexit. Now, I can't see this changing into the near or mid-term future, purely because COVID is around for the long term, I think. And with France announcing a national lockdown again, and the United Kingdom with its new tiering system, I can't see us getting back to normality within the next 6 months or so, unfortunately. Therefore, the current value of my Trading 212 account does not bother me too much at all, and I'm going to continue to pound cost average into investments that I see surviving for the long term, like Apple, Microsoft, Johnson & Johnson, and all companies like that, which will stick around for the long term. I'm really hoping that Shell and BP both bounce back strongly in the next 5 to 10 years, because they've taken quite a dip recently, and I have invested some extra money into them during that period, hoping that they will come out the other side, because they are strong companies with fairly good fundamentals underlying them. If you haven't got a Trading 212 account, why don't you check out one of the links in the description below. If you sign up to Trading 212 through that link and invest just £1, you'll get a free share valued worth up to £100, and so will one of my subscribers, as they are now my subscriber referral links. Equally, if you fancy making a bit of extra money, why don't you check out one of my videos on match betting. This is a way that you can make money through betting companies absolutely risk-free each and every month. I've now made over £5,500 in just under a year of doing it, so it's definitely worth doing. If it sounds like something you're interested in, check out my link below and it will sign you up to Profit Accumulator for 7 days for just £1, so you can give it a go absolutely risk-free and see if it's something that you think you'd be interested in continuing for a long term to make a bit of extra cash each month. As always, I hope you've enjoyed this video. I'll be trying to upload a lot more regularly now, like I've said, hopefully once or twice a week, usually towards the weekend. But thank you for checking it out. If you have enjoyed it, please like, comment and subscribe, and hopefully I'll catch you in the next one.